Welcome everyone. So in this module, we will talk about the difference between exhaustion wicks, rejection wicks versus WickFills. The difference is, so basically in the beginning, I know like a lot of guys and girls are gonna, well, traders are gonna get confused, but it's very important to really understand what an exhaustion candle looks like versus what a WickFill looks like. It's very important. So let's take a look at this right over here. So the very basics is this. So let's say you have a candle, a bullish candle, which forms with a big wick on the top. Now, normally, an exhaustion candle is a candle whose wick is bigger than the body. That is an exhaustion candle, because what this means is that price tried to move up, we couldn't maintain the bullish volume, and we came down and closed with a smaller body. So whenever the wick is bigger than the body, that's where you have exhaustion candles. So for example, let's say we have price moving down bearish, we're moving down bearish right here, very healthy bearish candles, and then you start to get a candle forming like this, and then eventually we start to go like a bearish candle, and then the wick starts to get bigger than the body. So this is where we can say, okay, the volume moving down is decreasing, and as the volume moving down is decreasing, the wicks are getting bigger than the bodies, so maybe price is exhausting right over here. You would also get this when, for example, sometimes we have price moving bullish, and and then you have a big candle that moves like this, followed by a bearish candle that forms like this. This is where you have an exhaustion candle as well. So this is where you have exhaustion candle. Now, in some cases, what can happen is if we only look at the bullish candles, in some cases you may get a candle like this, where it has a bigger wick at the bottom and small body and smaller wick on the top. Now this is a liquidity candle. I'm sorry, in the beginning, I think the topic should be exhaustion candle versus liquidity candle versus WickFills. So when you have bullish momentum, write this down. When you have bullish momentum and you have a bullish candle forming and the lower wick is bigger than the body, that's a liquidity candle, which means the candle moved down, grabbed liquidity. So the best way to understand what it means to grab liquidity is to say that the candle retraced, it grabbed all that momentum, all that liquidity. There was so much thrust in the candle that it started to move up after it grabbed that liquidity. Like when you have a car and you push the car back and then you release it. So that push back is gathering that force. It's gathering that inertia for it to move forward. So this is exactly what's happening right over here. The candle has retraced, grabbed liquidity to continue to push up. And once you get a candle like this, there's a very high probability that the next candle may look something like this to continue to push up. This is the ideal scenario, that the candle will look like this, where it breaks the previous high and starts to move up. Then someone can say, okay, you know what, if it's breaking the previous high, where the stop loss is going to go, stop loss probably below this previous wick, but depends. If you're looking at the 30-minute time frame, then maybe you want to drop down to the 15-minute to see how the 15-minute candle formed in this 30-minute candle with a liquidity wick, but that's also explained in the risk management section, that if the stop loss is too big, what you need to do and stuff like that. So liquidity candle. The same thing is for bearish. Let's say, for example, we want to take a look at, let's go over here and let's take a look at, let's do this red, right? So let's say, for example, we are moving bearish now, like this, and candle moves up. Sometimes the candle breaks the high of the previous candle and we close bearish. This is also grabbing liquidity, because one thing you got to understand, whenever a candle breaks the high of the previous candle in a downtrend, obviously, in a downtrend, if it breaks the high of the previous candle and that turns into a liquidity candle, this means that this candle tried to break the high to continue to move up, but it came back down, broke the low, and closed bearish. However, it closed bearish, It broke the low and it closed bearish, which means it made a lower low for price to potentially continue pushing down. this happens as well. So whenever you have a downtrend, like some mistakes guys are going to make is that whenever you have a downtrend and you're trying to see that, okay, whether you can take a buy once the candle breaks the previous high, no, then you got to take a look at counter trend trades. This is why this is not going to work. So exhaustion candle is a candle where you have, let's say if we're looking at this, exhaustion candle is a candle where you have a wick to the downside where it's exhausting and the wick is bigger than the candle. That's an exhaustion candle. The liquidity candle is a candle where you have the wick to the opposite side, giving you the impression that the candle tried to move up, but it couldn't maintain its move bullish, so it pushed down instead, making room for potentially the next candle to continue bearish. So we know the difference between the exhaustion candle and liquidity candle, right? Now, WickFill. WickFill is something that we have in great detail explained in the WickFill module. And just to do a little bit of a recap, WickFill is mostly going to be something where, let me get the blue pen right over here. WickFill is going to be, let's say you have a candle that moves bullish and it has a wick to fill. Let's say this is the 1 hour time frame or the 4 hour time frame, and you're expecting the next candle to fill this wick, and it's probably X pips, and that's what you're trying to do. That's basically wick fills, So if you have jumped over modules to get this one, don't do that. Go back to the WickFill module, go watch that, and then circle back over here. So what we're going to do now is let's take a look at an example. Okay, so here we are. Let's take a look at this example now. So over here, we can see that this is a rejection wick, right? So this is where you have rejection. And once you have this rejection, now you got to understand that all this area, whenever price comes into this area, like whenever candle is open within all this area, this means there's the probability price can reject that area until it closes, right? So let's take a look at this here. Let's remove this. Let's remove this. Okay, so now, first things first. We had a candle that came. Okay, let me just bring this somewhere over here. Okay, we had a candle that came up and we rejected right over here. Okay, no problem, right? So we rejected, and this rejection came after this big rejection. So obviously now you're thinking, okay, the next candle should go down. We went down. Now, the next time price came up, we came up to this area and we had a candle closing bullish. Now, you have a candle closing bullish and you have to identify where is your zone. So now what we're looking at is maybe the zone is right over here. Because if you take a look at this, this is where the candles closed below the price, whatever price there was here to the right-hand side. And now you have a candle that's closing above this area, letting you know that, okay, now there's a higher probability for price to move up. Right? We've closed above this area, we've closed within this wick range. So whenever a candle is closing within a wick range, this means this wick can be filled right over here. So there's a high probability for price to fill that wick. And what the next candle did, next candle, it broke the high and giving, someone an opportunity to basically take a buy at that point. But I don't really know what time it was at that point. If I look at the time right over here, if this is a 30-minute candle, so this is 10:30, 11:30 p.m. 11:30 p.m. is 11, 12, 1, 2, 3. This is 3 p.m. Eastern. So this is 3 p.m. Eastern time. And 3 p.m. Eastern time is after very, very close to New York close. So there's no volume at that time either. No volume at that time either. So if we're only looking at price action and you're saying that, okay, we broke above this rejection area, so now this candle and the next one should continue to push up. No, because no volume. So looking at this point is not that important. Now, let's take a look at the next time we came into this area was this candle right over here. And if you can see this, we basically closed below resistance up until we had a candle that closed above the area to the left-hand side. Now, once this candle has closed within this wick range here to the left hand side. This means now, if there's volume in the market, there's a high probability for price to continue pushing up. So if we look at the time, this is around, pre-London session. Pre-London session, price is setting up for price to continue to push up. And as you can see here, this candle closed a very strong bullish candle. The next candle, the bearish one, it closed above this area, above this entire zone. We closed above this entire zone with an exhaustion wick. With an exhaustion wick. This is not a liquidity wick because it's a bearish candle, with the exhaustion wick right over here. So now we know we've closed above the resistance to the left hand side. All we need, right? All we need is a confirmation for price to continue pushing bullish to fill the wick here to the left hand side, right? Next candle closed, small body, nothing happening at that point, right? The one after that, this candle, we closed with a liquidity wick. Look at the size of this wick. This is a liquidity wick. The wick is almost the same size as the body or bigger than the body. This is a liquidity wick. Liquidity wick, and we also closed above right at this point here as well. So now once we've closed above, you got to ask yourself, what's the probability for price to just dump down versus what's the probability for price to fill this wick here to the left hand side? There's a high probability. And this is where we actually took buy trades as a group in Discord for price to move up. We had a little bit of upward volume, and then we did fill the wick. So this is a difference between exhaustion wick, liquidity candle, exhaustion candle, liquidity candle, and sort of like a wick fill. Another thing which you have to keep in mind is this about wick fills. Let's say, for example, you're looking to the left-hand side, and what you see that, this is a wick right over. Actually, this is red. So let's make this red, right? So let's say this is the wick you have right over here. And candles are closing. Now, if this candle is open, and we have this wick here to the left hand side, we don't know whether this candle will stay above this area or will it continue to push down. We don't know that until the candle closes, right? If the candle's open and there's a wick to the left hand side, we don't know whether the candle will wick like what it did to the left hand side or it will close in that range. Now, once the candle closes in this range, like it did right here, now this wick to the left hand side becomes a wick fill. You get it? Because now there's a high probability for the next candles with volume to fill this wick to the left hand side, and then essentially fill this wick here to the left hand side. If you go look in the past, look at the past and look at all the big wicks the price has left in the past, and you will see how candles eventually filled those wicks, and then these wicks, they become your targets. Right? And whenever there's volume, something we've discussed before as well, you can use volume as a weapon. Whenever there's volume in the market, volume will help you drive price towards your take profit or the zone you want to go to or the wick you want to fill. It will drive price there. But at the same time, it's very important that you have to wait for the candle confirmations as well. Like, what confirmations are you looking for? Okay? Hope this was helpful. Difference between exhaustion candles, liquidity candles, and wick fills. It's very important that you look to the left-hand side, look where the zones are, look how the candles are closing. The biggest thing is you have to wait to see how the candles are closing. If you don't wait to see how the candles are closing, things are going to be very, very, very difficult for you. So I hope this helps, and we're going to see you in another module. Take care.